Hello, welcome to Multifamily on Zoom. So today we have a broker with us. I'm not gonna say the name. I will let him say his name because I don't want to chop it up myself. So I am so excited for this session today because it's just such an exciting moment right now to be in this market, depend on how you look at it. But me, I'm excited to have that conversation today with him. So today, I don't want to stay on the surface. I want to really understand what is happening, right? So in the Dallas market, multifamily market, I would like to hear about inventory, pricing, buyers' behavior, sellers' motivation, and what investors should be doing over the next 12 years. So first and foremost, I would like you to go ahead and introduce yourself before we
Uh,
can really dive in.
Hi, this is Chibuzor Nnaji, Senior Managing Director with Franklin Street, based here in Dallas, Texas. I lead a team of 4 investment sales brokers and staff. And thank you for having me here today, Suze.
Thank you for being here. I am so thrilled to have you. So, really and truly, as I had said earlier, I really want to focus on the market behavior. So, especially Dallas, because I know Dallas is a huge market. And what is really happening in the Dallas multifamily market right now?
Absolutely. Yeah, let's talk about it. I'm happy to give you my perspective and what I'm seeing on the ground floor and what's actively happening the first 6 months of this year here in DFW.
All right. So, tell us a little bit about it. Are we in a buyer's market, seller's market, or a nobody's know what to do market? What's going on?
Yeah, so I'd say, first 6 months of this year, there's been a lot of listing inventory. There's been a lot of deals that have hit the markets. Um, there's a lot of debt-driven sales just from 21 and 22 buys. There's a lot of people that are having to start to meet the market. But what we saw the first 6 months of this year was there was about 100 listings that came out between the months of, call it, February, March, and April. But with the geopolitical affairs and the run on the 5-year and 10-year debts in terms of the treasuries, it made it really hard for a lot of deals to get done. Pricing, I think, is trying to find balance between buyer and seller. The bid ask gap maybe going into the month of March was anywhere from 5 to 10%, but with the dislocation from geopolitical affairs and the run on the 10-year, we're starting to see inflation run hot just because of the rise in oil and gas pricing there. And so that's starting to print inflationary throughout CPI and PPI. And so, I think that gave the market a little bit of a pause because it's hard to get transactions done when, from a capital markets perspective, things are uncertain. And so I think, what this alluded to and added up to is that, through the first 6 months of this year, we had about 78 sales. And the last time it was that slow was in 2024. And then the time before that it was that slow was 2010. So we're at a 16-year low in terms of transaction velocity here in DFW, um, in terms of transactions getting done. And so what that means for the future, I think, is that there's going to be pent up sales velocity. I think that the second half of this year should prove to be busier than the first half. I think we're all hopeful for that. And if not, I think next year you definitely have to see a year that picks up from a 16-year low in sales velocity that we've experienced the first 6 months of this year.
Okay, so the first 6 months have not been that busy, but you seem very busy to me because we have, we were supposed to have you last week and things happened, but I, I thought you've been very busy the last 3 months. So you've seen some pickup. I mean, the market has been, there, you see more going on the last 3 months as
Yes. So I would say, like, even from our
quarter.
desk, yeah, from our desk, we've seen, I just sold a $26 million deal. We have LOIs agreed to on a 20 vintage asset down in Ellis County, Waxahachie here in Dallas. We just listed a $7 million deal. We have another deal going to escrow that's around $12 million, and we have another, call it $10 million deal listed on market. And so I'd say things are definitely starting to pick up after the dislocation that we saw call in March, April, May. But you know, we're 6 months of the way through, and so it's now I think that buyers are starting to find footing on price, and I think that's what's going to incite a second half being busier than what this first half has been. If that answers the question.
I see. Well, that's good to hear, and that's very hopeful. And but I think um, let's get to price. I mean, I'm on the other side. I'm always looking for deal, and so are prices finally adjusting to today's interest rate, or what you see happening when it comes to prices?
Yeah, so prices from peak market have substantially come down in many scenarios. You know, I'm as low as like if you're looking for distressed multifamily and it's called Class C, 60s and 70s vintage. I've heard of trades as low as 30 to 40 a door. For Class B, that has been highly distressed. I've heard call it 45 to 65, 70 a door. These same deals stabilized, I think, like Class C. You'd probably call it anywhere from 80 to 90, maybe 100 a unit. That's maybe on the high end. And Class B, anywhere from 100 to 120, 125, 130 a door stabilized. And so, you know, these prices that I just mentioned, peak market, were substantially higher. Um, Yields have definitely risen and price per units have come down. I think as we continue to move throughout the year, that prices will continue to stabilize and have to be able to meet the market where buyers are comfortable with yield if we want to see transaction velocity pick up as we look forward. It's really just supply and demand. You have X amount of sellers, you have X amount of buyers, and so for deals to consummate, there has to be an agreement on where buyers are comfortable with yield and where sellers are willing to move. And so I think as we look forward, that is the bid ask gap is only going to continue to come in. I believe that's how the market looks forward and moves forward as we continue to get through what's been a pretty slow 2 to 3, 4 years.
Wow. Okay, so sellers sometime, and we do understand because a lot of those deals were purchased at a point that where the market was really hot, and I think they over purchase. So those deals that are still in the market, like 2021, 2022 deal, and do you see those coming more right now, and those sellers are more willing to either let those deals go or still holding on to them, or what you see happening? I mean, as far as like when you bring a buyer, what when a buyer come, how you see your seller, or how do you advise your seller according to those deals that they purchase really high and now they find themselves in a way that they have to sell those properties?
Yeah, so I think are being more sellers that are being forced to sell per their lender. You know, in 2021, there was a lot of bridge loans taken out. You had the 3 year loan term and then your 2 year extensions. Well, if you bought in 21, that gives you about 5 years on your loan term. And so 2021 buys are being forced to either refinance or meet the market and pay off their lender. And so in most cases, if your loan balance, if your price per unit that you can get is above your loan balance, those sellers are meeting the market. In cases where the deal may trade below the loan balance, the lenders are having to get involved. But I think that across the board, people that purchased in 2021 that have not yet found a capital call, refinance, or a solution on the loan that they took out in 2021, you're going to start to see a lot of those sellers start to come to the market and meet the market per their loan agreement, and them being on their last +1 extension. And so I think that is something that we're going to see help pick up sales velocity. Those owners, you know, it's been 4 or 5 years of us trying to solution around what in hindsight was a peak market buy. And so I think at this point, if you haven't been able to find a solution, it is yeah, your lender's telling you that either pay us off or meet the market and take a buyer, or we're going to have a further conversation about what next steps may be.
Wow. That is very, very interesting. So, are buyers being more cautious or are serious buyers starting to come back? Because I was in a conference in Dallas in May. Um, I see a lot of my colleagues, I heard a lot of people saying, they've been taking a break and now they're going back. One of the dude I was talking to, that was funny. He has not been in the market for a while. He couldn't even remember his split. He's 70, 30. He was messing them around 80, 20. He thought, so why do you think you guys see more serious buyers coming around or coming back into the market right now?
Yes, I would say for sure. Like that's one thing I would tell you is that um, there's been no shortage of buyers that have interest, especially here in DFW. It's probably every single week that I'm talking to, call it 1 to 2 new buyers that want to be in the market, whether they're out of state or they're in markets. The buyer interest and people that are interested in DFW multifamily, everyone I speak to is a buyer in Dallas Fort Worth, and so I don't think it's not if, but when that the buying pressure begins and starts to step up here in Dallas Fort Worth. I'm talking to you about how the first 6 months has been low on sales velocity here in DFW, but I think the other side of the coin is that sales velocity increases and buyers are able to make deals. And I think once that picks up, it's not going to stop because there's so much investor interest and demand here in DFW. Just across the Sun Belt, we've had a oversupply issue, but I think that Dallas has absorbed better than other markets that it was compared to at the peak of the market, like Phoenix, um, Austin, Atlanta. Like I think those are three major markets that were compared to DFW at the peak, and I think DFW has absorbed better than those three markets in the last 4 years. And so I really do think that on the other side of this, that buyer demand and buyer interest is going to be robust. It already is. And so I think as that bid ask gap starts to close, we're going to see more competitive best and final rounds and things of that sort. It's not if, but when that time period comes.
I see. That makes everything sound more hopeful. I think it's in the best interest. But I think there's always buyer's interest, as you say, but it's less seller's motivation. I think that it's always there, but at the end of the day, as a broker, you know, most people who want to buy, they have to buy at a price that actually work for the investment. And we've been have a big shortage of that going on I would say the last 5 years. And there's a lot of pushback when it comes uh to us buyers and sellers, um, you know, and for good reason. I mean, for them to hold on to what they purchased and wanted to sell it at that price, but the market no longer showing that type of uh price anymore. But anyway, so as far as inventory, are we seeing more inventory um because owners are motivated to sell or because some owners have to sell?
Yeah, I would say listing inventory the first 6 months is definitely up. I think the second half of this year it's going to be it's going to be very busy across the Sun Belt. I think inventory will only increase. Our pipeline in terms of BOV activity, which is a leading indicator for deals that will be done in near future or to come, the second half of this year and next year is We're busier than we've ever been, call in the last 2 or 3 years. And just talking to other people in the market, I think they would agree with it. There's no shortage of valuations and owners that are trying to see where they would trade at in this market. And so I think that if it's an inventory question and where we're at as we look towards the second half of this year and next year, I think that there's going to be a lot of inventory and a lot of people that have to sell and meet the market because of the deals that were bought in 21 and 22. It's a lot of loans coming due, and I think that, yeah, like I said earlier, if you haven't solutioned around the loan that you took out in 21 and 22, the time is coming where you'll have to meet the market or maybe face foreclosure and have to go speak to your lender about what next steps may be.
Great to hear. So as far as property, are B and C class multifamily creating opportunity or more risk? What do you think about B and C class properties right now?
Well, I think it's creating more opportunity. Yes, there's risk obviously inherently involved with being C multifamily, but the opportunity is that 4 or 5 years ago when we took these assets to market, there might be like 10 to 15 competitive people going into best and final. Right now, that number is maybe like 3 to 5 groups. And so it's like what Warren Buffett said is like when everybody's greedy, that's when you should be fearful. And when everybody's fearful, you should be greedy. And so I think the opportunity, just given that with BNC multifamily, it's hard for most investors to capitalize those assets from an equity standpoint. And so I think the opportunities in that call it 60s, 70s, 80s vintage, if you're able to capitalize those deals with debt and equity and you're able to hold for the next 2, 3 years into a better market, like I think that those buys, or at least I'm starting to see deals go into escrow where it's at such a price per unit and story that I believe that these buys that I'm starting to hear about called in the last year or so are going to be profitable here in the next 3, 4, 5 years. And so, in the 90s or newer space, there's a lot of competition. There's a lot of competition in the 90s and newer space, especially here in DFW. A lot of institutions, as soon as the market turned in 2023, 24, they continued to deploy in the 90s or newer space. And so I think probably in the 90s and newer space, like we've probably found the bottom there. In the BNC space, maybe not yet, but I am seeing buys and deals that are happening in the 60s and 70s and 80s space that I believe to be profitable in the future just because of, yeah, there's not as much exuberance as there was from an equity and buyer standpoint in 21, 22. And so as a result, those yields have gone higher, those price per units have gone lower. And so you're starting to hear of deals that I think will show well in the future.
Well, but between A and B, like the way rents are going right now, and A properties, people who are in B tend to move to A properties. So, and where does that leave a C property, especially a vintage? Well, we're talking about a 70 vintage. So, what are your opinions about those? If somebody has a property vintage right now, what's the best way to go around it? If they want to sell it, or should buyers go for those? What do you think? Because there's a lot of opinions about that out there.
Yeah, 60s and 70s. From a buyer's point of view, it's the least it's the least attractive type of vintage right now. I mean, it's the oldest type of property. It's the hardest to manage. Like you said, from a supply standpoint, you're seeing rents fall and occupancies fall, and so yeah, 60s and 70s. It's tough for a buyer to want to buy that right now because it is the hardest to manage probably for the next 2 to 3 years. But I think that's also the opportunity because, like, if it's 80s or 90s, very well located, also there's going to be a lot of competition with buyers. Competition comes with value add in this cycle right now that are in great locations, right? And so, I think from a seller perspective, it's tough to sell these C assets right now. I think the only way that you're able to sell these assets is at the appropriate cap rate and the appropriate price per unit. And I think sellers having to sell at the appropriate price per unit and appropriate cap rate where investors deem that they can do a deal behind that price per unit and cap rate, or that their equity agrees with that price per unit and cap rate. I think that is the opportunity because it is the least desirable. But as a result, if a person that owns that type of property is going to be able to make a deal, call it in the next 6, 12, 18 months, you have to believe that the yield, so the cap rate and the price per unit, will have to be attractive to a buyer in the market, a market buyer.
I see. But um, going back to the same to what you were saying, of course, when coming down and occupancy falling as well, and new construction, where does new construction come into play with this market? I mean, if you're having an A-class property and you feel like, you know, people who actually live in B class move into your property, that is good because you still can keep the occupancy. However, you cannot increase rent as you would like to. So how does new construction comes into play?
Yeah, it's definitely suppressed rents in the value add space. A lot of these A properties are offering concessions and weeks free. And so I think that's been the big story across the Sun Belt is that there's too much supply. And so as a result, occupancies across all I guess you could call it A, B, and C vintages have fallen. And so it's an absorption thing. It takes time for these units to get absorbed. I think DFW is absorbing better than most Sunbelt markets. It's just you have to get through this time period. It was really bad in call it November or October, November, December, and I think last summer spring leasing season was also very tough. But here at DFW, I've started to hear at least in the last month, 2, 3, that they're starting to see more foot traffic than we saw last spring in summer leasing season. So that bodes very well. It's just a time thing, honestly. Like it's going to take time for us to get through the absorption. And then I think that, maybe call it 2028 might be the first year of rent growth that we have here in DFW. But I also think in that time period, if you're 18 months away from 2028, it's like in that window where it's very challenging for buyers and investment sales brokers to have the value add story of rents increasing and pushing rents and things of that sort. But if you're able to buy into the next 18 months, I think the tailwinds of possible rent growth in 2028, likely rent growth in 2028, should make the buy in the next 18 months look really good. Because
Good.
there's a dislocation right now because of all the A product, as you mentioned.
I see. So as far as investors, what would you like to tell an investor? What is the first thing investors need to understand before buying into the Dallas market?
I would just say, when working with a broker and buying in this market, like, it's you've seen a lot of deals fall out of contract in the last 2 to 3, 4 years. So just be prepared. Like have your lender prepared, have your lender ready, lender recommendation if it's very helpful. But also from an equity standpoint, I think that if you can be convincing and maybe proof of funds or however you may go about it to show that you have the equity to do a deal, I think that's where deals are being made. I think that in this environment, it is hard to have equity to do deals. So if you're able to show that you're capable and that the equity is there and you're sure of it, I think that's where deals are made in this market. I think that's what I would tell an investor is just be sure of where your investment money is coming from. And just, yeah, with brokers, just be in touch and continue to get feedback back within a timely fashion and just be punctual and professional. I think that's what I would say when looking in the DFW markets. I don't know if that answered your question, but I think that's what I'm looking for when I talk to somebody I don't know is just what is their experience, what have they done, why are they so sure in this environment that they can raise money or deploy equity into multifamily when it's one of the hardest things to do right now in the industry?
Yeah, I agree. Raising money been really hard lately. Uh, what numbers are investors getting wrong right now? Is it, I mean, from your perspective?
What do you mean? What numbers are investors getting wrong from? What do you mean by that?
I mean, it's like when someone analyzes a deal and they're trying to, or deal they're trying to purchase, and they come back to you with with a counter offer where you feel like they are getting wrong in from your perspective.
I'd say I was just having a conversation with somebody about this on Thursday, and it was their reversion cap that was glaringly wrong. Like I know you want to be conservative on your reversion cap, but here in DFW, I think if you believe in what you see in the publications and how population growth and job growth and XYZ are true about DFW, I think that's where I've probably seen the most is reversion cap when viewing underwritings with most investors here in DFW. I think it's too conservative of a number that I'm seeing. I'd say I think people are ultra conservative in regards to their expenses. Insurance being one of them. We've seen insurance premiums come in 20, 30, 40% this year in some scenarios. And I think that's investors that have not been tracking that have been underwriting that number a little bit too aggressive. I'd say, yeah, I think those are the two items where I'm seeing investors kind of be a little bit more conservative than I believe they should be.
Okay. All right. So, like if someone would come in, would like to come, they new to the Dallas market, what type of, where would you point them to go as far to understand, to have more material about that market, to understand what to read? Where should they go? Where would you point them to?
I would tell them to reach out to me. I'm happy to get them all the information they need to feel comfortable about the DFW market. There's so many resources out there, especially with like AI and things of that sort today. I think that a lot of it can be found, but just from the market insights from the ground floor, like being in touch with a broker is probably the best type of resource that you can have because we're working this market by every single day. We're in touch with a lot of buyers and sellers and lenders and everybody else in between on a daily basis. And so I'd say probably that's the best resource for most people that really want to feel like they've grasped the market and have their hands and mind around the market well.
I see. So, what should investor be doing right now to prepare for opportunities? Should they be waiting or should they be building relationship? What would you advise an investor to do right now as we speak in the market?
Build relationships with brokers and capital. I think now's the time to really start leaning in and trying to make deals because I think that as we get into next year in the second half of next year, like I can't overstate the amount of buyer interest that I understand there to be here in DFW. So it's not a matter of if, but when that it starts to get competitive here again. I think it might be the second half of next year or 2028, especially when rent growth comes back here in DFW and you're able to underwrite higher rents. I would say, yeah, it's relationships with brokers and capital. I think it's important to really try to lean into this market in the next, call it 6, 12 months, because after that, I think that the level of competition that's going to be here in DFW, I won't be surprised to see it. There's a lot of data out there that suggests that the housing market here in DFW is going to be number one here for the next, call it the next decade at the very least, just in terms of job growth and people growth and things of that sort. And so capital and broker relationships, I think, are paramount. And trying to lean into this market and getting your footing and making buys right now while still quiet.
Wow. Well, thank you so much. I know you have a hot stop today, but I have one last question for you. If you had to give investors one opportunity to watch, what would it be?
One opportunity to what?
To watch.
Um, I would say watch for the sellers that have to meet the market based on 2021 buys. I think that is going to be very interesting the second half of this year going into next year. Sellers that have to meet the market based on their purchase in 2021. I think that will be a very interesting price per unit discovery type of deal, whether it's going back to the lender or it's with the current owner. And if the loan balance is attractive as an investor, I think there's a lot of story around that, and there's people that are trying to capitalize those deals, and investors are open and happy to hear stories where a seller may be losing all their equity.
Wow. Well, thank you so much for coming here. And I hope next time you come, you'll be able to be live with us. And
Oh, for sure. Let's do it again this summer. We'll have to have another update here in the next 30 days or so, or even before that. I'm happy to hop back on. I appreciate you having me.
right. Thank you so much. Have a great day.
Thank you,
Appreciate
Susie.
you
You enjoy
coming
your
here.
day as well. Thank
You,
you.
you too. Bye bye. Well, guys, as you see, it was a very interesting conversation. I mean, I was excited to talk to him because the market is coming back. I was in Dallas, in May, and I was talking to some sponsors, in that market, and what they were telling me was there's a lot of inventory. So there's a lot of things going on right now, and a lot of inventory maybe due because those people has to return those properties from 2021, 2022. Um, those property have to go back to the lenders. Some people are forced to sell. So it's going to be very interesting for 2027 when it comes to multifamily market, especially according from what Nnaji just told us. Because as you can see, the Dallas market is a very hot market. So the thing about Dallas, there's so many sub-market in that metropolitan area. So you can, the minute you get off the plane in Dallas, so you can drive 2, 3 hours, and those properties still considered being in Dallas. So that is very, very interesting market, and I've never seen this market kind of slow down, but like he said, the the fact that the market in general globally have been slow, um, the real estate market here in the United States. So therefore, every location starts seeing a little bit of it. But even in the mix of that, if you are multifamily, Dallas is one of the places you want to be because there's always some event in Dallas. There's always something going on around multifamily in Dallas. And that's what this market is such a hot market itself. But, reach out to him. He will be coming back. And like he said, build those relationship with your broker, build those relationship with lenders because you need money. And also build relationship with your investors if you're gonna raise money. And he didn't say that, but if you are a syndicator, you definitely need to build those relationship in a down market because and then when it's time, so you can find that money quick because if you need the money to get there. And also he talked about getting your recommendation, your resume together. That way, when you get in front of the broker, you're ready. Because remember, broker want to entertain people who can buy because that's how they live. If they don't sell, they don't make money. So when you come in front of a broker, you need to come in a way to show that broker that you know what you're doing. You you can make that deal go through. And for you to do that, like he talked about proof of fund, but once you have all your recommendation and once you already talk to your having conversation with your lender and you can show them that, that makes it easier for that broker to start bringing you really good deal. Uh, However, when the broker don't see that in you, they're not gonna bring you any good deal because they're not gonna waste their time because they're not making any money. If they're not making money, why do they want to entertain you? If you give them any indication that you're not able to take a deal to the end, right, to the final stage. So there's no reason for me to be wasting my time 2, 3 months, and then at the last minute you couldn't close on the deal. So broker talk to people that appear to be able to close on deal. So remember that. And then if you're new in the market, find like you said, a few brokers in that area and build those relationships and understand that market by itself. Because if you don't understand the market, you're not going to be able to underwrite your property appropriately. And that way you'll be able to know how the market, this particular market behave, how this market behaves and how you can actually uh, work in that particular market. So as far as I think he gave us a lot of good nuggets, it's up to us to use them for our advantage because you want to get into a broker's mind and think like a broker in order to get a deal from a broker. And psychologically speaking, and that's the way your conversation should always be, you need to try to understand their perspective, whether you're dealing with a broker, whether you're dealing with how would I say that? Whether you are dealing with a lender and you need to understand their perspective. That way you can meet them exactly where they are. He did mention insurance and reverse cap rate. Um, those are the two numbers he thought that people are not paying attention to. So that's another thing. Maybe in his market, the reverse cap rate may be different. And insurance, you need to know insurance. Insurance, it's something that is location based. You need to understand the location, whether the location is near water, whether the location, how Mother Nature react in that particular location. Like for example, Dallas, you have a lot of hail in Dallas. Dallas, there's a lot of hail. Texas in particular, there's hail always in Texas, but South Texas doesn't deal with as much hail and tornado that Dallas deal with. So environment also count. You need to understand the climate. You need to understand all these things and how those gonna increase your insurance. And not too long ago we had Julio, an insurance broker. Julio was here and he was telling us how insurance have kind of like he's been seeing insurance coming down a little bit because he was saying that there are less people filing claim and that helps a lot with bringing the insurance premium down a bit. So these are the things you really need to understand if you're a new investor trying to get into the market. And even if you're not, you are a passive investor, it's good to find out those things. And then each local area has their own data. So dive into the data to understand. And lately, AI can really help with a lot of this as well. Um, and talk to people, find out, make those connections. And these are the things you need to do for yourself and also for your investors if you are a syndicator. Um, but really and truly, I think that was one of the good opportunity we have today to talk to a broker. Unfortunately, he couldn't stay longer. And but however, I think this is a very good way to find brokers. If you want um his number and his email, please reach out to me because he didn't add them because one of the reason I bring people here, I want you guys to connect with them. So if you like to have his number or his email, he worked with Franklin Street in Dallas, Texas. So reach out to me and I'll send it to you because it's not necessarily in this broadcast. But when we disseminate this session to people, uh, is not gonna have his information in there. He didn't give it to us, but I do have his information. I can definitely send it to anyone interested and want to build some type of relationship with him. And if they're interested into the Dallas market, but one thing I can tell you about if you live in Dallas, you are in real estate. There's never a dull moment. There's you're always busy. There's always things to do. There's always um some meet up going on. I mean, it's always active as opposed to some other area you may live. There are things, but not as much. But the Dallas market, it's a market. There's always, even the conferences, most of those conferences happen in Dallas. There's never an issue to find conferences in Dallas. So anyway, this was what we wanted to bring for you today. And let us know also, I would like some feedback, what you guys would like me to bring for you. And especially those people who are not here. I see a lot of people listen more to our meeting than showing up nowadays and more like a podcast. I think that's the direction we want to go because people reach out later. So which means they are listening. They are still listening to what we send them. But however, not many of you still show it in the community. If anybody has something they want to pass around, it's time to do it. Let's say you're looking for someone because I realize some people do listen to those meetings after the fact when we send it to them or they go to YouTube. Um, so if you need looking for something, is a good time to put it here and talk to people and reach out to each other. And that way you guys can build something. As you know, I have something coming up. And if you know anybody in healthcare or anybody who want to build a portfolio, we're talking about residential portfolio. Um, we having a course coming. At first, we're actually having a master class where people can come and learn how they can start buying their own real estate. And with the course we're going to provide, and with our course, we really provide you an ecosystem like the support and everybody you need. Those of you who've been in my meeting, you guys see all my connection, all the people that I bring in this meeting. So this is exactly what's going to happen. Those experts going to be around you to help you in your journey. If you like to do studying your portfolio by yourself instead of investing into somebody's deal and you want to be active in the market, so that would be a good way to start doing it. And that's a course we're going to be doing for you. But we'll be having a master class soon And you guys will be invited, or you guys can invite anyone who may be interested. The masterclass is free, and then anybody can come in order for them to know, hey, I would like to buy property, but I don't know where to start. I don't know where to find a lender. I don't know who to talk to. And also we're gonna have some, CPAs, wealth strategists, all those people coming together to support you and help you in your journey. With that being said, this is the end of our meeting today. And thank you to those of you who show up. And even if you came in late, you still gonna this will be sent to you and you'll be able to listen from the beginning. But our conversation today was a broker in Dallas we spoke to, and he gave us a lot of nuggets on how to approach the Dallas market, and how to find your next deal if Dallas is the market you would like to be in. Anyway, thank you everyone for being here, and I really appreciate you. Um, Happy Juneteenth. If yesterday was Juneteenth, and so I just want to say happy Juneteenth today to you. Let's meet again next week with another broker, and let me know where you guys would like, if you guys want to be more in a listening mode, more like a podcast, or would you guys like to be more still coming up on Saturday? Um, or if you have any question or any speakers you guys would like to hear from, or any topic you like to discuss, please let me know. That's what we're here for. Thank you and have a great rest of your weekend. Bye.